Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 13th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Before we get to the charts, I do want to invite you to the webinar event that will be hosted July 15th, Wednesday, so this Wednesday, and it is free to attend, and I'd love for you to join me. If you go down here to news and come down here to the bottom here, you'll see a traders exclusive webinar July 15th here. You can click on that link. There's also a link in the description down here in the YouTube video, and also you can get it at other spots as well. But right here, traders exclusive webinar July 15th. Me and 3 other top traders will be presenting that day. I start at noon, and I would love for you to join me here. We'll be talking trade sequences and how these powerful blueprints help you find and trade great high probability opportunities with skill and clarity in all time frames. It's going to be a fantastic presentation. I'd love for you to join me. Space is limited, so make sure you register for the event using the link here. You can also come down here and use the link down at this bottom part as well. Again, if you are registered here, you'll be given access to the recording even if you can't make it live. So please register for that event. It's going to be fantastic this Wednesday, July 15th. All right, let's get to the charts here. Here's the ES. You'll see we talked last week, how we had a narrow 3-day range developing. I mentioned if we drop down even as low as 3100 or 3080, it could be a buy opportunity for a continuation higher. I mentioned that the narrow range, if broken to the downside, could be a failed low. You can see down here we did have a narrow 5-day range that fired off, and we had about 175, 170 points of upside here that could be seen off of that pivot low. So we calculated where we could see this price move to, and we were looking at 3280 as a very quick upside target. So from this low, if you project higher 175 points, you get 3280. 3280 will bring us back to the FOMC key level from January 29th, which is still unfilled, still yet to be tested after its creation here. Again, failed new low inside the Pima trigger zone, and we are now seeing that move materialize to the upside. So again, we had this move locked in last week as an idea here, and now we're starting to see that thing come to fruition. We're now above the 4, 5, 6-day range here. That's going to be important because price needs to continue to really hold that zone overall for a continuation higher. But again, this market has been very bullish overall. And even if it were to pull back here again, it could still continue to be a buying opportunity as we push higher. So right now, the way that this low has come into play, forecasting up about 175 points gets you to that 3280. But then, again, this key range right here is very important. If we start to break through 3231 and continue to hold above that zone, then you start to open up the 50% expansion target at 3385, followed by the 100% expansion target, which is 3538. So we have major upside targets here that could be reached once price is able to clear 3230. Now, there's always the potential to see a failure here. So if price gets above 3230 and starts to reject in this area for any reason, that could easily lead to a return back toward the 3077 half level. So that's going to be something to watch in case of a failure. All right, here's a look here at the NQ now. The NQ is up about nearly 1% here already. This one has been nonstop on fire to the upside. Every pullback, again, has been a buying opportunity. We haven't even tested the 8-period average yet this month. This month got as low as that 10.076, but didn't hit the 8. And it's been up ever since. So as I've mentioned before, we could still see a deep pullback here into 10.5 perhaps, and still be a great buying opportunity for a continuation higher. Now, before, we had a target at 11K, and we're going to likely see that target today. We're at 951.75 on the high of the day. Right now trading 39.5. Very, very easy to grab those last few points there to hit that 11K level. But based on the key range, right, 10.942 here is the level as well, and we've already reached it. So based on the key range, we've already gotten the target here. But we still could have more upside throughout here, especially if price continues to hold that 10.5. So this thing has been very, very bullish overall. And even if we start to see rejection here and pull back again, it could be another buying opportunity for another continuation higher. All right, let's take a look now at crude oil. This one's down about 1% currently right now. You can see here that the previous week we had a very, very narrow range overall that was developing here. One big shakeout with a strong low at 38.50, and now we're starting to see this thing hold here. Again, this is very similar to the ES, where you have this narrow range, 1, 2, 3, 4, 5, 6 days, 7 days if you want. So we can bring this up to a 7-day range and quantify that range, and you'll see how compressed it is here. You have compression right in here on that 7-day range. So we're looking at these 7 days right there, and there's your compression, and this forecasts a move of about 4.5 points. So from this low at 38.5, you can forecast higher 4.5 points, and that'll take you to about 43s, right? So we have more upside that can get us to about 43s off of this failed low and strong low. Now you're seeing a perfect midpoint retest here off the previous session's mid. If it can continue to hold above that level, this is the shot here to continue higher. So we have a really good shot to break higher in crude oil here and get to about 43 based off of these lows. Again, if there's any failure to hold, say 39.5 by the end of the day, that may turn things down a little bit lower here. But as of right now, off of this strong low here, we could be looking at a rotation up toward 43 at the very least. All right, let's take a look here lastly at gold futures. Currently up about 0.6% right now. This one too has been trending higher at a very steep pace here. Finally got above 1800 and came, within a point of hitting our 1831. 1831, as you know, has been our target for a while. Ever since we got a really strong low here, I mentioned that 1831 could be around the corner. And again, we've had a really nice move to that zone. Now that we're pulling back a little bit here, it's building that energy again to perhaps see another squeeze. And again, 1957 would be the next major upside target based off this key range. But taking it little by little right now, if we do see a squeeze here, 1860 would be the target based off the monthly low and average monthly range. So you have 1856 to 1886 as the next upside target zone if price can continue to basically hold this PIMA trigger zone. So we could theoretically drop, say, as deep as 1780 and still be a continuation move toward that target zone by the end of the month. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Please be sure to register for the Traders Exclusive Webinar event this Wednesday, July 15th. As always, good luck, trade well, and I'll see you in the trading room. Take care.